So the most important thing is to don't panic. Very rarely is the IRS pursuing criminal action for unpaid liabilities. If you are truly in a financial hardship, there are many law schools that have tax controversy clinics. There is a term that many people in the resolution and representation space use, and it is you don't rep who you prep. Having more qualified representatives out there, we're able to help more people.
Hey, Jessica, welcome to Keep What You Earn. So happy to have you on.
Thank you for having me. I'm excited to go through all of your questions today.
Yeah, I'm really excited for this because I have been dying to have somebody on to talk about these topics. And as much as I could probably touch on them, your experience far exceeds mine in these areas. And you actually have been educating me a lot lately on this. So I'm just really excited to share you with everybody listening. So I know that everyone just heard your introduction, but could you just briefly introduce yourself, say who you are and what you do?
Absolutely. So I am Jessica Smith. Online, people know me as Tax Savvy Jessica, and I am a licensed enrolled agent. So I know an enrolled agent is not super familiar to a lot of people, but essentially I am a federally licensed tax practitioner, which allows me to represent taxpayers before all branches of the IRS. And my background includes solving really from simple tax problems all the way to very complex tax problems. So I've been doing that for about 7 years now. And, I work with clients who owe, $20,000 all the way up to, $100 million.
Well, the show Dirty Jobs with Mike Rowe, if they had an accounting equivalent of that, it'd be you.
There's a lot that in the resolution space that you're kind of exposed to. And if you ever just want to have a story time, I could go on forever on that.
Absolutely. We will definitely dive into that at some point. So for those listening, right, this is why I'm so excited for this topic, because so many of you are in my DMs, are in my text messages, are responding to my emails, and you're saying, I owe a crap ton. What do I do? Or I can't afford to pay what I owe. I got a huge bill this year. What can I do? And you hear from me all the time, guys, about advice on how you can prevent that in the future. But what Jessica's going to talk to you about today is what to do when that happens and how to handle it. So Jessica, if one of our listeners here has a huge tax bill or a letter from the IRS saying they owe way more than they could ever afford right now, what is your advice on what they should do next?
So the most important thing is to don't panic. Very rarely is the IRS pursuing criminal action for unpaid liabilities. I know that is a big kind of misunderstanding of how our tax system works, but the IRS is significantly more forgiving than some of the more state and local agencies. So if you have a problem with the IRS, they have several different opportunities to resolve those problems. I also recommend if the liability is, if you are preparing a current year tax return and you realize you have a large balance due, the worst thing to do is not file. The penalties are significantly lower, or I should say accrue slower, if you file and don't pay versus not filing and not paying. The penalty can be as much as 25% of the unpaid balance. If you don't file, don't pay, you hit that 25% within the first 5 months of the original due date of the tax return. So that can be pretty significant for a lot of people if they're like, oh, well, I need a couple of months of reprieve to be able to get this money. The other concern is if you at least file and don't pay, you're looking at an accrual of 0.5% per month up to that 25%, which I think is approximately 48 months. So if you have the opportunity to pay in full within 1 to 2 years, you're able to really mitigate those penalties simply by filing the return. Not filing the return is the worst thing that you could do.
That's really good advice. And to go along with that, I'll add in ignoring the letter is also a bad piece of advice.
Don't ignore letters. A lot of them are wrong. I literally saw on a Facebook group that the IRS said, our records show we received this from you on this date. We're sorry we lost those records. So it's more than likely that the IRS is wrong or has a misunderstanding of what they're trying to deliver to you. So if you receive a letter, go to someone who understands this process, knows how to read the letters, knows how to review the information contained in the letter and where to go to verify if it's correct or not. And then, if you discover it's wrong, you don't get to do nothing. In some cases, you just wait until maybe the records catch up. So plenty of taxpayers had balance due notices that were wrong. Those payments have just not yet posted. So we're waiting for the payments to catch up to the letters. But in the event that you do find another error, so let's just say the IRS says, oh, you earned this much money based off the records we received, but your records show that you actually did not receive that money, that requires a response. You don't want to ignore something that's wrong simply thinking that the IRS will ignore it. They will at some point catch up. And if you don't respond, they'll say, well, you didn't dispute our amount that you owe, so now you owe this.
Oh, interesting. So if somebody gets a letter that says they owe a lot of money, right? What are their options in terms of paying it? Because a lot of folks know they can do some type of payment plan. Like, what are the different routes they can take to, let's say they have the best intention to pay it, but they just can't part with that chunk of change right now. What are their options?
So there are a couple approaches. The first is to determine, what your current ability to pay is. So depending on the balance due, so if we're looking at balances, let's see, the IRS just changed some things. I'm going to go with balances of 250,000 or less. Typically, the IRS will say, if you can pay this amount in full by our collection statute expiration date, which is about 10 years from the date the tax is assessed, then they will allow you to get on a payment plan, obviously divided by typically between 72 and 84 months. If you can make that monthly payment, they don't require a financial review, and you just can request a plan based off that payment amount. Now, in the event that you typically owe more than $250,000, usually your matter is going to go in before a revenue officer, and you're going to have to work with a person at the IRS who will review your financial information, and they take into consideration like what your ability to pay is. And it's a formula, not a negotiation in many cases. So what that number says is what you're stuck with monthly, unless you can prove some extenuating circumstances otherwise. And then also if you happen to owe, less than 250 and the calculations for the ability to pay still show that it's maybe not affordable, there are other alternatives such as a payment arrangement where you won't full pay the amount, you'll do a partial payment, but that isn't to be confused with an offer and compromise. An offer and compromise is a program where you present financial information to the IRS, and essentially your ability to pay calculated over a certain number of months, plus your equity within all of your assets, is substantially less the amount that you owe. So that route is available, to people who are in a more dire financial hardship. It's a formula, not a negotiation, which a lot of people get kind of stuck on. So definitely, reach out to somebody who is very familiar with that intake process and can qualify you for the right program, because there's plenty available.
Perfect. And so if somebody has, let's say it's not dire, let's say it's maybe I owe $10,000, $20,000, which for a lot of folks is a lot of money, but they think they can pay it off in a year, 2 years, maybe less than what you just laid out there for the payment plan. What should they probably do?
So the IRS doesn't have necessarily shorter payment terms. If you believe you're going to pay it off in 2 years, I always recommend taking the most lenient monthly payment that you can, because there's no prepayment penalty. Obviously, paying the balance in full prior to the end of the payment terms is going to be a lesser amount, because the penalties and interest will not continue to accrue. So take the lowest monthly payment plan and then make payments in excess of that monthly minimum, so that obviously you're paying the balance due off quicker. I also think if for some reason, again, if we're looking at a much lower balance between 10 or 15,000, if it's feasible to pay it off within a 4 to 6 month time frame, there is a possibility that you can just get on what's called an informal payment arrangement. And so long that you pay within that time frame, the IRS doesn't require you to pay the fees associated with establishing an official agreement. And then, of course, if after the 6 months, that's just not feasible, you can get put onto a formal agreement as well.
Okay. So it sounds like there's just a lot of options in terms of I can't afford my balance due, that there are different options. What would be someone's first step if they say, I want one of these options, Jessica, tell me how do I start one of these things? Like, do I just call the IRS and say, I want a payment plan?
So I always recommend that people try to seek professional guidance first, mainly because taxpayers that call the IRS on their own, the first thing I will say is that the agents on the line that works with individuals, so not with practitioners, they are probably not the most qualified agents to help you with all these different scenarios that could occur. So hiring someone is going to give you the most professional guidance. They have not secret phone lines, but we have different phone lines that we call. We have more educated and well-versed agents to speak to. They kind of understand our language a little bit better. And your representative is there to support you and to protect your information. You get on the phone with the IRS and they immediately say, where do you bank at? Where do you work at? And as a taxpayer, you might feel that you are required to give all that information. As your tax practitioner, I might say that I don't have that information available if I truly don't, or, letting them know that that's not the purpose of my call, because that's not what we always have to provide at the agent level. So my understanding of how I'm going to approach a matter versus how a taxpayer would do it, you might release more information than is necessary out of fear for what the IRS might do to you. Whereas a practitioner, we have such great rapport with the IRS in many cases, we're going to be able to have a much smoother, more natural conversation, and we know what we can and cannot say.
Right. And actually, from my experience, even the revenue agents kind of talk to us a little bit differently because as savvy professionals, they'll say, okay, listen, this is what's really going on here. Like they'll be like level with us and say, okay, here, because you understand what's happening, Shannon, let me explain what I can do and how we can make this work. It's kind of like having two realtors or two, brokers that can talk to each other at the same level and have mutual respect. Right.
Yeah, and we understand each other's, jargon or use of vocabulary for, how we accomplish certain things. I mean, some of the conversations I've had about, CSED and CNC and IRS and OIC, like it just gets lost in translation. But when speaking with with someone who is, employed by the IRS, they understand all of that. So I don't have to modify how I speak with them to make sure I'm describing exactly what needs to take action on.
Yeah. And so for those listening who say, okay, I think I'm a candidate for one of these things. I want to pursue one of these. Can I, but Jessica just said, hired a professional. Well, if I can't afford my tax bill, how do I hire a professional? How do you navigate sort of the conflict of tax resolution? Is it expensive and is it worth it? And what comes along with that?
There's a couple of different approaches, actually. The first thing is if you are truly in a financial hardship, there are many law schools that have tax controversy clinics, and they'll do almost all of the work that can be done at any firm or by someone like myself, in many cases for free if you qualify. They are done by supervised student attorneys. I know that the school that my prior law firm hired from, the USD law school. They had an amazing professor who was overseeing that clinic, and they take on matters in any capacity and work through them using those student attorneys for those who are in a financial hardship. There are three different types of licensing that you can work with. So you have enrolled agents like myself. You also have CPAs, and then you also have attorneys. Naturally, enrolled agents are going to usually be more cost effective than a CPA, who might be more cost effective than an attorney. It just really depends. I always recommend doing thorough research, because a lot of these like tax resolution firms are what we refer to as mills, meaning that they hire a lot of people. So they'll hire a lot of really inexperienced enrolled agents and CPAs, and even sometimes fresher attorneys to handle these matters. And they just really don't understand what they're doing. They use a lot of sales type verbiage. They might say, we have this exclusive program that the IRS has brought to us, which is complete crap. It's not true. Anything that you can get directly from the IRS is what these people are doing to you, but they're explaining them in a way that sounds more grand than what it is. Most legitimate firms will provide very transparent pricing upfront, and they will qualify you before they take your money. These mills will typically say, anyone is eligible for this, offer and compromise program as an example. And they'll usually collect anywhere between, $3,000 to $10,000 upfront, and then never deliver on their promises. So the firm that I worked at prior, they would thoroughly qualify the person, and they would say, look, financially, this is not feasible for you. If we move forward with this, this will get kicked out. And that's why their approval rating was like 99%, because they refused to submit an offer just to get a fee. Additionally, I have some opportunities where I'm kind of adopting a similar model as the student attorneys. And, I'm working on a program where I'm going to be training other tax professionals how to perform resolution work. and offering a student rate for maybe those who aren't available or eligible for a free program, but they can get a more cost-effective option, so long as they're willing to work with a supervised student.
I love that. Yeah. And that those students, by the way, aren't necessarily new students, bright eyed and bushy tailed out of school. These are probably people like me, who are experienced CPAs or accountants who just want more resolution exposure because, as you guys may know, I mean, Jessica, you're an EA, right? An enrolled agent.
Yes.
I'm a CPA. Jessica and I have almost equal ability, except I can sign off on financial statements, which I never do. So,
and I don't want to do that.
No, and nor do I really. But what it comes down to at the end of the day is that these types of people can represent you. They have the qualifications to be able to do that. The letters don't mean anything though. If you don't have trust in the person, they don't understand your goals, and they don't understand what it is you're trying to accomplish, because ultimately they're representing you. So when you're looking for someone, I think when you're researching, like you said, do your research. You've also got to understand, they have to understand you, your situation, and not just want to help you because that's their job, but really understand where you're at.
Exactly. And there are a lot of different ways to qualify people that you're working with as well. Enrolled agents have lots of different programs out there that train this type of work. Mm-hmm. There is the certified tax representative. There's the National Association of Enrolled Agents has a representation fellow program, which is like a 3-year, really intense kind of program. So if you see anybody who has the NTPI fellow behind their name as their designation, those people are typically very, very experienced. Naturally, if you're going to work with an attorney, I would suggest working with someone who has a master's in tax law, because typically they go through extra training to understand kind of the ins and outs of the tax law. And so they actually understand a lot from a somewhat criminal aspect as well. Mm-hmm. So if there's potential for criminal exposure, I would definitely recommend working with an attorney. And CPAs that are really tax focused, if they are working with if they have a branch that offers representation, typically you're going to find some people who've done this enough and understand, the steps needed to resolve an issue.
And you mentioned the criminal aspect too, and I'm gonna reiterate this again because our listeners need to hear it multiple times. Will our listeners go to jail for not doing their taxes right?
Most likely not. And
she won't say no.
Most likely not. And I will say this because people believe that simply making a mistake on your tax return immediately means that something was fraudulent, right? We don't like the F word, but people believe that, if I made a mistake, it's going to be misconstrued as fraud, intentional, willful, and neglectful. And the IRS is really not looking for, most taxpayers for that. Now, if you take a very aggressive position on a tax return and you don't win, then you have penalties that might be higher than the typical person who maybe just forgot to send in a 1099 and had some income underreported. But for the most part, again, the IRS is willing to work with people. My firm used to handle very, very massive cases, and we had an owner of a corporation who owed a lot for payroll tax liabilities. I'm talking over $100 million. And the IRS was continually working with him to get him on a payment plan. At the time of when I was employed there, he was not actively facing criminal charges. And I have clients that owe, several millions of dollars, and the IRS is willing to work for them.
So you heard that, guys. Like, somebody owed $100 million and wasn't in jail. I mean, could have ended up, let's just be hypothetical, could have ended up in there eventually, but nobody over your typo, no one is going to jail.
There was some criminal exposure in that case. So we were obviously, it was a law firm at the time. So they were doing their best to mitigate the, mitigate the exposure on that. But really at my law firm, we didn't have too many criminal tax cases, not necessarily for taxpayers. Now, tax preparers, that's a whole nother story. We did handle several tax preparer criminal cases. There's actually a handful that I was present on, and they were really, really big cases. And, these tax people were essentially, leveraging the tax code in a non-legal way in order to, get people these massive refunds, because everybody thinks that the larger the refund, the better the tax preparer. And so the problem was that culture, the desire to have the best refund possible for their taxpayer, ended up putting them in a position where they did a lot of straight out fraudulent things. They would create fake 1098-Ts for education credits. They would create, they would sometimes have taxpayers that qualified for certain credits and actually make up income to qualify for certain credits available. They would allow children that were not eligible to be dependents to qualify for credits as well. So typically those tax preparers who knowingly and willfully act in those capacities are absolutely exposing themselves to criminal prosecution. I've seen it happen.
So on that note, would you encourage our listeners to, like, let's say they want to explore tax resolution, they have a big bill or something. Would you encourage most of the time that they get resolution assistance from someone other than who did their taxes? Or would it be ideal if they use the same pro?
So there is a term that many people in the resolution and representation space use, and it is you don't rep who you prep. And the primary reason is because it's a conflict of interest, right? You as a preparer are going to maybe subconsciously protect your own interests so that you are not subject to any, IRS preparer penalties or punitive damages kind of thing. And that is not the best interest of your client. There's even, other ways that repping who you prep can cause, again, issue for yourself and for the client. So it's always recommended, and this is very common practice, to work with someone maybe who is not the person who prepared your tax return, because if they took an aggressive position and knowingly took it, they're going to cover their butt before they protect you as a client.
Interesting. So yeah, I think that's really good advice. So Jessica, thank you so much for really shining a light on all of this for our listeners, because one of the biggest questions I always get asked is, am I going to jail? Number one, that's like the number one question. Am I going to jail?
Am I going to jail?
And then number two is, okay, well, what happens if, right? Like, I got a bill this year, I can't afford it. What do I do? And I think the whole point here is that you have so many options, and the IRS is so much more flexible than you guys think. The IRS is they're not looking to criminalize anyone. They just want to get as much money as they can out of you, and as fast as possible, and work with you to make that happen, because they acknowledge that, like, you can't pull money out of your, and pay them. So they want to work with you to figure out what is doable. And that's the whole point here. So, Jessica, how can folks hear more about, potentially working with you or what you have going on? I know you have a program for tax practitioners too. Tell us where we can find out more information from you.
So I have that coming out potentially around the beginning, maybe second week of August. It's going to be called the 100K EA, and it's designed around going over the foundational process for entering the resolution space. There's plenty of programs that offer really technical overview of how to approach representation. And my goal is to make sure that people not only understand the technical piece, but to make sure they understand how to manage a case, how to have a relationship with a revenue officer or a revenue agent, how to, control the client connection and, keep them in a position where they're not freaking out and making decisions without, connecting with you first. So that's what I'm hoping to adopt there. And then, of course, by having more qualified representatives out there, we're able to help more people. And these people will be, pillars in their communities, maybe some of the only representatives within a certain, number of miles that are able to help people. So I'm really, really excited about that. And then anyone else can find out about me by following me on Instagram at Tax Savvy Jessica. You can find me on LinkedIn as well. All of my handles are Tax Savvy Jessica. So yeah, I would love to connect with anybody and happy to go over whether or not you qualify for a program or not.
Absolutely. So definitely take her up on that, guys, if you're in that position. Jessica, thank you again for hopping on. I really appreciate the time.
Thank you for having me.
All right. We'll see you next time.